Testing 1, 2, 3. This is Monty. How you guys doing? I'm taking my usual walk. It's a 5-mile walk that I do as often as possible. You're going to hear a little bit of noise in the background, cars going by, whatever's going. Let's see if we can get through it. I'll try something new in terms of just recording to upload later versus going live. Anyway, we'll see how that works out. I want to give a state of the cryptocurrency economy versus the traditional economies. I haven't done this particular podcast in a while. And speaking of cars, they're continually going by, that's for sure. But the crypto economies versus the traditional economies, we always want to keep an eye on both of them to see how things are going. Now, there's some good news and bad news in terms of correlations. Let's get right into correlations because it seems like right now there's a lot of investor money that's pouring into the traditional economies. So you can actually determine whether or not the crypto industry or economy is going to go up or down based upon how the traditional markets are doing. In other words, when I look at the Asian markets around, I would say Pacific Standard Time, if I look at the Asian economies around 3 o'clock Pacific Standard Time, I can get an indication as to where the U.S. market is going to go the next day. So if it looks like stocks are going up in Asian markets around 3 o'clock, 4 o'clock Pacific Standard Time in the United States, that typically tells me that we're going to be seeing some gains in the crypto areas. You're going to see bullishness. It's typically going to be led off by Bitcoin. Bitcoin is a bellwether blue chip cryptocurrency, and it dictates what the other guys are going to do. So if you're investing in the cryptocurrency industry, and you want a blue chip stock, if you will, or the equivalent of a blue chip stock in the cryptocurrency industry, you go with Bitcoin, okay? And some of the other plays in the crypto sphere are going to be, of course, Ethereum's, and then it goes further down the line as far as what you want to put your money into. Okay, but anyway, the Bitcoin is the bellwether crypto play, and then it goes down from there, depending upon your preference. But yeah, take a lead from what happens in the traditional markets. If it looks like futures, early morning, when the stocks open up in the United States, I think 6:30 a.m. Pacific Standard Time, when you hear that bell ring and Wall Street opens up, if it looks like futures have already opened up positive, guess what's going to happen? The traditional markets are going to be heading upwards, and more than likely the cryptocurrencies are going to follow, starting with Bitcoin. So we don't want this correlation to last forever. Unfortunately, right now, investor money always has to gravitate towards diversification and towards something that's going to offset or have a correlation, a negative correlation. Okay, right now we have gold going in the same direction, almost as Bitcoin, almost as oil, almost like stocks. These guys aren't really separating that much right now. We have to have a safe haven play when the economies, when the markets, the various markets, when they're operating correctly. You're always going to have these inverse correlations between gold, between stocks, between the various what we call safe haven plays, for instance. That, you always want to counter what the other one is doing, go in the opposite direction, right? So we're not seeing a lot of that. Even in the bond markets, we don't have a lot of choices right now. When you see investors taking their money out of stocks or something, you always want to see those guys put their money into something else, typically as a safe haven play, typically as a way of diversifying, right? So when you see a lack of diversification, typically what that means is there are a lot of bots, there are a lot of algorithms. That is cheap, freshly printed Fed money going into these markets just based upon what whether or not there's momentum plays or not, right? If something is going up, like a tech stock, then these algorithms typically jump on it, right? So there's a lot of bots and trading algorithms, and there's a total lack of retail investors. Retail investors, for the most part, bring sentiment into the areas of investing. Investor sentiment is kind of sporadic in terms of people. When you inject human emotion into the markets, that's usually where you get the volatility, because depending upon how I feel, depending upon how you feel today versus tomorrow versus the day after, that's going to determine what you do for the most part, especially if you're not a very long holder of stocks or cryptocurrencies even. So anyway, we need to see more retail participation, which is not going to happen anytime soon. We got a recessionary environment. Money is being diverted into more essential goods and services that you really need, that you really have to have. So a lot of money is basically sitting on the sidelines, being very cautious. So we're going to have this same weird trading going on, and it's going to be very artificial in terms of when the Fed seems like they're going to help corporations, when the Fed seems like they're going to print money, when the Fed seems like they're going to keep interest rates low, that drives the little bit of sentiment in the markets towards constantly more churning, constantly more speculation, constantly more gambling, and the most overvalued plays that you've ever seen in your life. You know, when you see Tesla and Google and Apple and Facebook and Netflix, when these guys just go to the moon, no matter what happens, they just keep going up and up and up. That's artificial, okay? That means that we're basically gambling in the markets, and we're hoping and praying that we can make that money and possibly get out before anything happens. You know, the last one out of the door, the last one with a chair, playing musical chairs, is usually the winner. So that's what's typically going to happen in those areas. So make absolutely sure that if you're going to participate, that you understand you need to have a plan. You need to have your strategy mapped out before you get into it. Typically, that means know why you're investing. Have a time horizon that's consistent, that you can stick with it, that you're comfortable with, okay? So, and again, let's go back and take a look at some of the specifics in the cryptocurrency space versus the traditional markets. Okay, so in the Bitcoin areas, for instance, we're looking at building out an infrastructure. That means, for instance, mining in the mining area, the mining ecosystem. We have to have an infrastructure, right? So that means take a look at any publicly traded mining companies. That's infrastructure. Take a look at exchanges. If there are any exchanges going public, like Coinbase is probably going to go public at some point, take a look at that. That may be a good addition to your portfolio. Other up-and-coming ones might be Binance. BitMEX is going through its own implosion, so to speak. I don't know whether or not it's going to be fatal or just temporary and what's going to happen, but these are all opportunities to pick up some cheap cryptocurrencies if you want to. If you have this done before, then pick them up cheaply. Okay. Some other things you may want to look at is let's see, infrastructure plays in the crypto space. So we went over mining. We went over the decentralized exchanges. In the DeFi areas, be careful, because right now we have an abundance of money going in there, and a lot of it is very fleeting money. It's money that's not really committed to anything. These people are making insane returns, but just as quickly as a lot of them go up, they go down as well, because again, a lot of these newer, nouveau rich or new players in the space, in the crypto space, they're not concerned about whether or not they're going to be committed or not. They just want to get in and get out, and the Robinhood type of effect. Robinhood is a trading platform where everybody just goes to gamble. So we have a lot of that going on, even in the crypto space. Now, moving right over to the traditional markets, you have to realize, look, a lot of money is actually on the sideline. I think I read like it could be, I don't know, between $1 and $3 trillion that is absolutely afraid to be committed at this point into the traditional markets. In other words, a lot of retirement, pension funds, money management companies, they're sitting on the sidelines with that investor money, and they're trying to determine whether or not it's even necessary to be in these markets. And a lot of them are waiting it out. So pick and choose your plays very carefully, because if you don't have that major participation with the larger players, and as I mentioned, the smaller players, the retail investors, they're not in it at all. A lot of them they're indeed at home with the Robinhood apps, and they're jumping in and out of bankrupt airlines and bankrupt oil companies and bankrupt retailers. But that's not a long-term strategy. That's just basically you trying to time this perfectly. And as we know, a lot of traders, 1% of them make all the money, 99% of them get screwed, and screwed badly. So if you're going to play that game, make sure you understand. Have some capital, have a very specific amount that you're willing to lose, have a very specific time horizon, hopefully, where look, if it ain't working within a month, 2 months, 6 months, whatever it is, once your capital is gone, once that time has been expended, whatever you set aside in terms of time, the amount of time you want to put in there, get out of there, because that's not a long-term strategy. Speculating, trading is not a very good long-term strategy unless you're one of the 1% very lucky ones who can make it happen. I've been hodling myself for 5 or 6 years, and my track record, I can guarantee you it pretty much outperforms most traders. There's very few traders anywhere that can match my record, for instance, for hodling. Okay, I've been hodling since 2012 or 13 in the Bitcoin space, and going from an average price, for instance, of $300 to where we are now, 10,600. That return is typically impossible for most people. So make sure you understand, hodling is the challenge. Trading is not a major challenge. Trading is easy because you're getting excited, the adrenaline is going, and you're basically jumping in and out, and it's not really sustainable, but it is exciting, it is exhilarating, but you can go through a lot of money very quickly. So make sure you understand the difference. Just compare hodlers to traders and make sure you understand the difference. Okay, so again, on the macro economic side, in the traditional space, we got a lot of headwinds. Okay, we have major banks that are not very profitable, that are getting a lot of liquidity injections. We have artificially low interest rates. They're going to stay that way for years to come, more than likely. And if the foreign markets are any indication, the economies of Europe and Asia, for instance, are zero or negative in terms of their interest rates. And a lot of the central bankers are pumping money into each and every asset class they can get into. So they're propping those markets up, whether it's stocks, whether it's ETFs, whether it's real estate, whether it's commercial property, whether it's mortgages. We've got a lot of artificial money in those areas. You typically don't want to be in an asset class where there's freshly printed central bank or Federal Reserve money in there, because you can't tell the valuations. When you do your analysis on valuations, you can't factor in the implications of having freshly printed Fed or central bank money in there. It's going to distort that pricing. When that pricing becomes distorted, your fundamental analysis is thrown out of the window. Forget about proper determination of value. The only thing you're going to be doing at that point, you're going to be speculating. And when it comes to investing in those various asset classes, speculating in terms of whether or not you're getting your money's worth, whether or not valuations are close to what you think they should be, it's a big gamble. That's just a big gamble. And it's very hard, it's very difficult. So be careful, because BlackRock, Carlyle Group, you name it, the major real estate companies, Sam Zell, all of these guys are playing with very cheap, freshly printed money, and they can afford to play around. They can buy up rental houses, for instance, 10,000 at a time, hold on to those things just long enough to get some sucker to come in and take over after they've speculated enough and made enough money to sell off those same assets they only held for 2 years or 3 years or something. So, and it's the same Ponzi scheme, it's the same musical chair scenario where it may look like there's some value there, it may look like there's opportunity there, but this thing is going to drag on for a while. This recession/depression is going to drag on for a while. In the meantime, you have some major players who are going to be looking for opportunity wherever they can, but a lot of them are not committed for the long term. They know full well, you're not going to be renting out commercial properties. You're not going to be renting out a whole bunch of houses and making any profit anytime soon. With the pandemic causing people to do remote work, there's an abundance of commercial property out there. That commercial property is not going to be rented out anytime soon in large numbers. For the most part, the mortgage forbearance is running out. So the rent is coming due on the residential side. The rent is coming due on the leases. On the commercial side, the leasing moratoriums are expiring. Got a lot of issues going on. We got the and don't forget about the temporary layoffs are now becoming permanent. The furloughs. That's a nice fancy way of saying I'm going to fire you eventually, because the furloughs are turning into permanent layoffs by the tens of thousands. Every time I look around in the oil sector, Shell, Chesapeake, and the airline industry, United, Delta, and the retail environment, of course, tens of thousands, Regal Cinemas, closing all U.S. operations. So, don't take for granted that we're going to have a whole bunch of people that are going to be competing for a very small number of jobs, okay? And Congress and the Senate, those guys are not in a big hurry to do anything anytime soon. So remember that as well. The stimulus money the lack of stimulus money has done a lot of damage. A lot of that damage is permanent. A lot of those jobs are not coming back. A lot of those companies are gone. So if they do pass something, it's like putting a Band-Aid on a major heart surgery. It's not going to do a lot of good. So, but despite all the pessimism, there are opportunities. Okay, so make sure that you, again, look at in your crypto space. Commit your money. Dollar cost average your way in, slowly but surely. Get very small amounts of stock, get very small amounts of crypto. Ease your way in as you learn about these things. Get on these chat boards and discussion groups and discords and et cetera. Talk about the fundamentals. Talk about what you need to know. Ask the critical questions, what you need to know to reassure yourself that you are doing the right thing. But start with a very small play, okay? If you have any questions, contact me. I'm on the Facebook and Twitter and everywhere else, and I'll point you in the right direction if I don't answer your question directly. I have a tremendous amount of resources on my own website and my articles, my blogs and such, and so you can get a lot of information from there as well. But yeah, commit yourself to some very small entry points in the crypto space, even with the Teslas and some of the others. and make sure you understand you're going to be in for a while, okay? So don't put your mortgage or your rent money in there. Just put money in there that you can afford to lose. Especially, you don't want to be awake at night. If I learned anything about investing a long time ago, if you can sleep well at night after you've made an investment, you've made a good investment. If it keeps you up at night, you probably overcommitted yourself. So don't make that mistake. Invest money that is going to allow you to sleep good at night. Over time, you can always increase your holdings, even in the traditional stock markets. Now you can do fractional shares, okay? Talk to your broker about fractional shares. Talk to them about how to dollar cost average. Talk to them about how to have automatic deductions taken out of your checking account or something like that, very small amounts over or whatever period of time. And that money does add up. Those stocks do add up. In the crypto space, do the same thing. Use automatic deduction to buy into Bitcoin, to buy into Ethereum, to buy into the various plays that you want, okay? Make sure, though, that you're looking for fundamental value. Make sure that it makes sense in terms of what you're investing in, okay? Just like they did in the gold rush times, the people who made the big money are not the people who were looking for gold. They were the people supplying the picks and shovels, okay? So if you're a mining store and those miners are coming in there looking for picks and shovels and maps and supplies, you made a lot of money. And in the gold rush era, those people made a lot of money. And the same applies now. If you invest in the infrastructure that's up and coming, okay, because we're going to need faster internet. We're going to need robotics. We're going to need AI. We're going to need, quantum computer investments. We're going to need a lot of that stuff going forward. And for better or for worse, somebody's going to make a lot of money during these downturns, and some people are going to not do very, very well. So make sure you understand there's going to be opportunities. There's even jobs that are going to open up that are going to be quite different. Commercial cleaning services, anything that has to do with sanitation, anything that has to do with helping with the repurposing of properties and floor space, etc. These companies are going to make a lot of money. Online conferencing, consultation, etc. These are going to be some hot areas going forward. So anyway, make sure you stay optimistic. Make sure you look for opportunity, and don't be too concerned about the idea that there's absolutely no way to benefit from what's going on. There are ways to benefit, and you could be one of them too. Okay? So anyway, again, I haven't made a podcast in a while. Excuse the background noise. I'm trying to talk as loudly as possible. Anyway, I'm recording this, see if I can figure out how to upload it. And we'll talk later. Guys, have a good day. Thanks, and take care. Bye.